Lots of people shy away from the stock market due to the fear of losing money, which is completely understandable as your hard-earned money is at risk. So today I'm going to explain some of the main reasons why people lose money in the stock market, as well as some preventative measures to help you make more informed decisions. As always, nothing in this video is financial advice, and if you want financial advice, you should seek a licensed professional. So the number one reason why people lose money in the stock market is by investing money you are not prepared to lose. If you are picking stocks in the stock market, then you should be prepared that there is always a possibility that the company you have purchased goes to zero, or if not zero, its value may drop by 20, 30, 40, 50% or more, and you have to be able to stomach this. If you are investing money that you really need, for example, to pay your rent or pay for bills, then you're not going to be able to stomach those losses. There are no guarantees in the stock market, and investing with the hope of a specific stock going up by X amount in, say, X amount of months starts verging on gambling. And if you can't sleep at night because you're worried about an investment, then you have definitely invested too much. So the number two reason why people lose money in the stock market is by not researching your investment. Just because your mate Dave down the pub made 10k on a fluffy dog cryptocurrency doesn't mean you will too. Picking stocks or cryptos just because you've heard they are good or you like the product a company sells doesn't mean they will do well. And not doing your research is probably the main reason why people lose money. If something's too good to be true, then it probably is. You should always be careful where you are consuming your information from. People online who own a stock or crypto often have an agenda and often speak highly of the positives and often brush over the negatives. If you're watching videos on a specific stock or crypto, it's worth double checking information is correct and reading around the subject. If you're doing individual stock picking, then it's really worth looking at a company's fundamentals. And if you don't have time to do this when researching individual stocks, then you are probably better off purchasing an S&P 500 index fund. And just to throw this out there, every year S&P Dow Jones Indices does a study on active versus passive management. And in 2019, they found that after 10 years, 85% of large cap funds underperformed the S&P 500. And after 15 years, nearly 92% are trailing the index. And these are fund managers who spend all day, every day, looking at and researching stocks. So if you still think you can beat them, then by all means try, but the odds are stacked against you. So the number three reason why people lose money in the stock market is through panic selling. People often panic sell when they see a stock they own going down. If one of your stocks has gone down, then you need to question if the fundamentals have changed from when you started investing, and is there any game-changing news on this company? If not, and you are just selling because your stock has gone down, then you could be selling at the wrong time. If anything, this could be a time to accumulate more. The longer you invest, you will learn to enjoy when a company you invest in has a down day and when the fundamentals haven't changed, as it just means you can pick up cheaper shares. So the number four reason why people lose money in the stock market is making high-risk trades. Some high-risk trade types or asset types make it much easier and quicker to lose money than just buying stocks. For example, by using leverage or trading on margin or trading options. And on some assets like options, or when you're shorting a stock, you can even lose more money than you bring to the table. So if you are new to investing or trading, then I recommend paper trading first, or using what may be called a virtual account or demo account with your broker. Most brokers offer these, and they give you a load of fake money to play with. Not only will this help you to see how different assets and trade types work, but it will also help you to learn how your broker works. While I do recommend paper trading, it is also worth noting that your psychology will be very different when you have your own real money on the table. People react very differently when their own money is at stake. So if you can, try to think of this as real money. And when you move over to a real trading account, start with smaller amounts first. So the number 5 reason why people lose money in the stock market is trying to time the market. Obviously, you want to buy low and sell high, but trying to time the market consistently is not as easy as it seems. Most people that try to do this actually end up not buying at the bottom as they think it's going to carry on going down and instead miss it as it goes back up. No one knows when the market will tank next or bottom out. Otherwise, everyone would be a millionaire. So don't listen to someone on YouTube or Twitter claiming they know. If you look at this chart on CNBC, if you tried to time the market and you had missed the 10 best days every decade since 1930, your return from the S&P 500 would be only 28%. That's 28% over like 91 to 92 years, which is ridiculous. But if instead you had stayed invested, then your returns would be 17,715%, which is insane. Even in 2020 alone, you would have made 18%, bearing in mind this article was made in 2021, compared to minus 33% if you missed the best 10 days. If you went back to 2010, then for that decade, your returns would be 190%. And if you missed the 10 best days, your returns would be halved to 95%. There have been many studies on this over time, but the consensus is just to invest consistently over time. So the number 6 reason why people lose money in the stock market is trading rather than investing. Trading and investing are 2 very different skill sets. Trading is about making money quickly in the short term, normally in the space of a day. Investing is the aim to make money over a longer horizon, maybe over 6 months or many years. You can make a lot of money by trading, but this takes years of learning and practice to do well at. And often beginners come along and think that it's as easy as buying low and selling high, which unfortunately is not the case. Trading is also better suited to higher risk products such as options and futures, which come with additional risks. So while neither trading or investing are guaranteed to make you money, if you want the easier route, then investing is definitely the one. Anyway, let us know below why you think people lose money in the stock market. And if you got this far, I want to thank you so much for watching. And if you got any value from this video, then don't forget to give it a like and subscribe. And now that you know some ways to not lose money, you may want to learn how to make money quickly. So I recommend watching this video next. It's been Ollie from Get Geek Finance. Thanks for watching, and I'll catch you in the next one.